Let's bring in Robert Thummel, Senior Portfolio Manager at Tortoise Advisors. Robert, it's great to have you on the show. And I'm going to start right there. If we have a situation where oil stays lower for longer, what's compelling in the energy sector in terms of stocks right now?
Yeah, Morgan, thanks for having me. So if oil's lower for longer, that means demand's probably going up. You're going to transport more energy. And so energy infrastructure is a great place to be in the energy infrastructure or in the energy asset class if you're looking for an energy play. Also, with a lot of these energy infrastructure stocks, you get really high dividend yields. So as we look at 2024, interest rates are probably coming down. The 10-year is probably coming down. So if investors are looking, where can they get exposure to the equity market, but also significant cash income, energy infrastructure is a great place to be.
I want to get your thoughts on Exxon because they did unveil a pretty large plan, multi-year strategy, involves $20 billion in stock buyback, capital project spending to come in at $23 billion to $25 billion, oil and gas production to average 3.8 million barrels, and put out their, as I mentioned, their multi-year targets. Did you feel good about what Exxon had to say? Do we see that as a harbinger of where the industry more broadly is going, and to your point, where output is headed?
Yeah, so Exxon's doing exactly what we think at Tortoise the energy sector should do, which is continue to generate significant amounts of free cash flow. It's really hard to find free cash flow in this market. Energy is the one place where you can get a free cash flow yield of 10% or higher. That compares to 5% for the rest of the market. So Exxon is generating a high amount of free cash flow. It's returning that free cash flow, as you highlight, back to the shareholders in the form of buybacks, but also a really solid dividend yield, 4.5%. It's going to grow that dividend yield next year. And in addition, while it's doing that, it's growing energy production, which needs to happen, but also helping the world participate in decarbonization, which is just as important as well for investors.
Robert, you feel differently about the energy sector if WTI goes below 65?
Not 65, John, I don't think so. No, I think that's great for us as consumers. That's great for lowering inflation. As far as energy infrastructure is concerned, the price of the lower oil price, the lower natural gas price actually will boost demand. For the producers, where they have a little more commodity price sensitivity, they've lowered their costs significantly. They've lowered their debt significantly. They can still pay pretty strong dividends. They can still generate a lot of free cash flow. And so, yeah, $65 doesn't scare us as an energy sector investor.
Okay, so to clarify, you're not saying that you think that those prices are bottoming, just that if they do go lower, it's not necessarily a big deal.
Yeah, that's right. You know, oil prices, where could they bottom? That's always a good question. I will say this from a fundamentals perspective. You will likely see, if the OPEC Plus agreement carries out, you'll see lower oil inventories in the first quarter of next year, which is a surprise. That usually that doesn't happen. If we see lower oil inventories next year, which you probably won't find out until March or April just because of the lag effect in the reporting, but that will result in higher oil prices because typically you see inventory increases in the first quarter of every year due to the seasonal weak demand in oil demand globally.
Your outlook for natural gas, and I ask that knowing that that is a market that tends to be very volatile in terms of price fluctuations, but on the global stage, there is a huge amount of demand for LNG right now, and that's not going anywhere.
That's right, Morgan. Actually, at Tortoise, natural gas is our favorite commodity. We'd love to see everybody talk more about natural gas than oil because longer term, natural gas is decarbonizing, but it's also really efficient from an energy perspective. And the world needs a lot more U.S. natural gas. The Marcellus Shale and really shale in general has really helped the U.S. possess a lot more natural gas than anywhere else in the world. We're the largest producer of natural gas in the world. We're the largest exporter of LNG in the world, and we don't expect that to change anytime soon. So companies like Cheniere Energy are a classic example of the way investors can get exposure to the growing demand for U.S. natural gas, not only domestically, but also globally.